All right. Hello, everyone, and welcome to this session called What Accounting Services Do You Need or Require with Clare from CJ Bookkeeping. Now, just mind as a little tick whilst we get Clare over here. There she is. Hello, Clare. Welcome.
Hello.
So
Hi.
I introduced you and the session, and I'm going to hop now, and I'll be back for the Q&A. So have fun, everyone.
So, hi everyone. Claire from CJ Bookkeeping, and I have been running my practice now for 14 years. Scary to think about that. Okay, so I'm going to be talking to you obviously about your accounting services, what you may need and when, basically. So before I go into that, there's two main financial roles that are forth on everyone's mind when they hear the words accounting services. And that's accountants and bookkeepers, and more often accountants initially. But which do you need and when? Well, first I thought I'd address the most commonly asked question, which I'm sure maybe some of you are already asking yourselves, and that's what's the difference between a bookkeeper and an accountant? So the official definition is bookkeeping is the accurate recording of financial data, and accountants then interpret and report on that data. So in a nutshell, the bookkeepers lay the groundwork for accountants, providing the data that's essential to the performance of their role. So bearing that definition in mind, consider this saying, which I'm sure maybe some of you have heard of, rubbish in, rubbish out. So bear that in mind. Okay, so right at the very beginning of your business journey, which do you need? Firstly, I describe the accounts of a business as the heart of the business. So I think everything that a business does flows through the accounts. Every single thing that a business does, everything that happens during its process of delivering its product or service passes through the accounts at some point and may pass through it in multiple stages and multiple times. So the bookkeeping's essential. No matter where the business is in its journey, so whether that be a startup, it's in its infant stage, or whether it's a long-term established business, all companies need a bookkeeper as the finances must be recorded. And I'm going to touch on some of those specifics as to why. But first, I just want to mention, obviously, when a business first starts up, it's the business owner that's the bookkeeper, as well as all of the other jobs that are required in that business. So the business owner will be the ones that are sending the quotes to customers, taking the orders, sending the invoices to customers, making sure those invoices are then paid on time, and that is purely the sales side. So they'll also be paying the bills, recording all the expenditure, hopefully monitoring those finances as well. But they'll be doing that expenditure probably on a daily, monthly, or even maybe an annual basis if they are a sole trader just logging their self-assessment tax return. So as I said, that is as well as doing absolutely everything else in that business, providing the service that business provides. So it's usually as a business grows or becomes more complex, that's when a business owner will struggle to manage that area of the business both efficiently and effectively. And that's when they may consider outsourcing the whole financial element of the business to an actual external bookkeeper. So as I've mentioned earlier, some of the reasons that the bookkeeping must be done, I'll touch on some of those now. So first off, cash flow. Cash flow is absolutely paramount area of a business to be understood. So without accurate cash flow forecasting, a business can get into serious trouble and fail. You've heard of the saying, obviously, cash is king, as the saying goes. So I always recommend a business owner at any stage at all to set up cash flow forecasting. And that only needs to be a basic Excel template, but you need to be able to see ahead of time in future months where your cash may be either falling short or where you may have a surplus, because this will help you set plans in place to manage this ahead of time before that cash becomes too tight. Remember, if you can see it before it happens, you'll be able to put plans in place to change it. So, those changes may be, having a push on extra sales in the coming month, or you have to spread out some expenditure, or ask for some credit extension or cutting some costs altogether, the cash flow forecast is absolutely key here for you to see that ahead of time and put those plans in place. And I mentioned that I can provide a sample template if anybody would like it. So I think my email address is going to get put in the chat for you. Just my inquiries at cjbookkeeping.co.uk. If anybody would like that template, just pop us an email and we'll get that sent over to you with a quick sort of just a description of how it works. So obviously, talking about the cash flow, a business owner really needs to understand their monthly costs to ensure that they're bringing in sufficient sales, but also getting that money in on time to cover the costs. But as well as obviously ensuring the sales cover the costs, you need to make sure that they're covering the costs and more, because you need to be making a profit, because if you're not making a profit, what is the point? It's also essential to monitor the finances and use this financial data to make your business decisions. So with the numbers of your business, you can analyse your current status. You can then make some adjustments. So whether that be, working on a marketing campaign or cutting some costs in a particular area, and then you can remonitor the numbers, looking at those results, and then you can make your decisions of what to do more or less of. But I think equally as important, if not more important, there's compliance jobs that have deadlines attached to them, and most of them will have penalties attached if they're not done on time. And these compliance jobs are incorporated with this bookkeeping role, and penalties can be pretty costly to a business. So your finances need to be, as well as accurate, they need to be up to date. So they need to be done on time, so that these compliance tasks can be done on time and are also accurate. And obviously bear in mind that some compliance jobs may only kick in at a certain level. So, for example, a company may become VAT registered, needs to become VAT registered, when a turnover reaches £85,000. So you have your finances up to date, so you can monitor these thresholds and make sure you're registering at the right time. So that's pretty much the why. But I hope you're not sitting there thinking, oh my God, I've got to sit now and trawl through paperwork every single day. No, absolutely not. I did right back in the early stages, but bookkeeping is all about processes. So it's not about spending all of your time inputting invoices and receipts into an Excel spreadsheet. We live in a digital age now, so there's so many different softwares out there that can help you digitalize all areas of the finances. So whether that be, inputting of your invoices and receipts, and even automating your sales invoices going out every month. But there's also softwares out that can really help you with the operational side of your business, depending on what your business is. So what's really key here into getting a solid financial basis is to get a robust process in place. So right from the order coming in, the whole operational process that's creating that product or delivering that service, right through to the billing and collection of payment. It's getting that process as automated as it can be, where possible, but also that it's working efficiently so nothing falls through the gap. And as automated as the process you can get, obviously the more scalable that process is. If it's quite a manual process, it's going to need adapting as the business grows, because if it's too manual, it's not scalable. So this is the time at this point, right at the very beginning, where we need to look at this process. And that's where a business owner may get some external help from the experts, the bookkeepers and the accountants out here, and get setup help. So, help identifying the right software, getting that software set up, getting that right software set up and get you set up on the journey on the best foot. So the business owner will probably at that point, right in the early stages, manage that themselves until such a point that the business either grows, and obviously the time element becomes an issue, or it gets a bit more complex, and that's when they may consider to outsource that task, the bookkeeping. So I hope that covers most of the why and a little bit of the when. But obviously all I've mentioned up to now is purely bookkeeping. So what about an accountant? Well, a sole trader might appoint an accountant right at the very beginning to help them with their annual self-assessment tax return if they're not sure how to do this. But this could also be done by a bookkeeper as long as they're qualified in that particular area, or the business owner may be comfortable handling themselves. An accountant is only really required at the point that a company becomes a legal entity, such as a limited company. And the minimum that accountant is required to do is file the company's accounts with Companies House each financial year. But if that's all the accountant's doing for you, I wouldn't say they're a very good accountant. That's the absolute minimal they should be doing. An accountant should be offering you so much more value to the business, just rather than for your year-end accounts. So they should be talking to you about, your long-term plans for the business, making sure they understand what that business needs to provide you as a business owner as far as your income. What are your long-term goals? What's your exit strategy? How you need to leave this business at such a point when you retire, or, but they need to know this information, because they need to make sure that your company structure is set up in the correct way to provide you what it needs you to provide. If you need to bring in extra directors, family members, all of them sorts of things, but also to make sure that it's working in the most tax efficient way. And obviously they need to also be working hard to make sure that they're saving you, the company and the business owner, as much tax as possible. That's the accountant's real area of expertise. So I would say the key time to source an accountant is just before you structure your business after sole trader status. Because obviously you don't need to register your business. In effect, if you're a sole trader, you just need to register as a sole trader. So also, because of that, it would be the accountant that would register the legal entity. So they would help you in actually getting that business set up. So, it may be a good idea, depending on how quick your business grows, to look around at accountants earlier on before you think you might need them. Just so that at the point that you think your business is growing quite substantially and you need to maybe consider, do we need to change or not, then you can have that conversation with an accountant that you've already sort of sourced or looked at. And accountants should be able to do a comparison analysis to show you that the tax you're paying as a sole trader versus the tax that you'd pay as a limited company, because this helps you decide when it needs to happen. So, for example, that's what I did with my accountant at the time I incorporated my practice back in 2016. So what I did is we had that conversation about, the long-term goals, what I needed the business to provide. So I gave him the figure that I wanted to take home as an income for my household. And we worked that back to a profit that the business needed to make for that to be possible. So for our incorporation comparison analysis, we used the profit figure of £35,000. And when we did the comparison, the saving of tax, if I incorporated at that profit level versus the tax I'd pay as a sole trader, was just over £2,000. So, £2,000 is £2,000, not to be sniffed at, is it? But if all that seems a bit too much to you at this early stage, what I would probably just suggest is just go and have a look at some accountants. Ask them if they can do this incorporation comparison, if it's something that they could do for you. If they say no, then they're probably not the sort of accountants I'd probably want to work with or take on board. But if they say yes, then log them as a potential accountant for the future. So I hope that's making sense so far. Another question you might be pondering on, especially if you are a sole trader or, right at this early stage, is what can I claim for? What's classed as a business expense? Well, the list is quite extensive, when you look at the real nitty gritty of it. But it's basically anything that was used or bought for the purpose of the business. So, for example, sole traders. So they probably won't have, or they may not have an actual separate business vehicle, and they're quite likely to be using their personal vehicle for their business travel. So any travel that is for the business, so whether that be, visits to potential clients or going picking up some stock or something like that, the mileage can be claimed for. along with, parking, toll charges, things like that, public transport, that could all be claimed for, as long as for the business. A personal phone they may be using to make their business calls, then the business percentage of that bill can be put through as a business expenditure. You've got, all of your marketing costs. So, maybe if you're doing some Facebook ads for a business page, stationery, computer equipment, hotel rooms, if you need to stay away from home, meals on overnight business trips. There's really quite a long list, and I've barely scratched the surface. So I would say is get some specific advice to get clarity before you start, that's more a bit specific to your business, rather than kind of just looking at a long list of everything that's not even relevant to you. But get that advice from a bookkeeper or an accountant. And there is also an extensive list on the HMRC website, and I believe that link's going to get posted on the chat for you. So do click on that link and have a little look, and obviously it'll send you off in all different places to kind of narrow specifics down on those specific expense items. But go and have a look. There's a big long list of things that you can claim for, so it should give you a bit of clarity. But if you're really unsure, go and speak to, like I said, a bookkeeper or an accountant to just the specific expenses that are relevant to your business, just to get an understanding of exactly what you can claim for. Okay, then lastly, I was just going to touch on sort of the different business structures that are out there. And there's three main ones. So most businesses will start as a sole trader if they're a one-person business owner, or a partnership if they are a two or more business partnership. There's two or more business owners. The reason being is obviously this business structure only requires an annual tax return to be completed to HMRC every year. And then there's a couple of milestones that tend to happen. Obviously, the next one is incorporating as a legal entity, and there's different variations. Obviously, the main one is a limited company. But looking at the different milestones that might sort of trigger those thoughts of changing the business structure. It may be, obviously, depending on the success of the business, how quick that happens, but your sole trader may firstly become VAT registered, and they can still do that as a sole trader once their turnover reaches £85,000. Obviously, before that, you can go voluntary VAT registered, and there are advantages of doing so. But again, talk to a bookkeeper or an accountant as to what those advantages would be. And it's usually at this point that might be the first decision to outsource the bookkeeping, just to help them with getting those VAT returns submitted. And then obviously another massive milestone for a business is when they may need to take on employees. Now, at this point, if you need to take on employees, I would absolutely 100% highly recommend getting a bookkeeper, and a good one at that, because unfortunately there are some poor ones out there. But to purely manage your payroll. Payroll is something you absolutely cannot afford to get wrong. The payroll has to be accurate in terms of submissions to HMRC, which happen at every single pay run, but also the paying of staff, which is absolutely critical. The employees are the number one asset of your business, without a shadow of a doubt. So they have to be paid right. There's also auto enrollment pension schemes. So at every pay run, the payroll needs to assess the employees for their auto enrollment, and there's lots of legislations and bits that have to happen around that. So the payroll's becoming more and more complex with all of these, legislations coming in place. So this is an area I'd absolutely strongly recommend you outsource straight away when you reach that stage. And obviously then, depending on how the business develops, it's usually at those milestones, it's at those stages that I'd probably recommend that the business may be best suited, be more tax efficient running as a limited company. So again, once you've got that accountant in place, or you've got a contact, at least you can at least have that conversation and do those incorporation analysis. Okay, so that's kind of it in a nutshell. I hope I've given you a bit of an insight into the wonderful world of accounting. So I think we're going to bring Sabrina back in and see if we've got any questions.
Hi, Claire. That was fantastic. Thank you so much. What a
You're welcome.
insightful, invaluable session. So thorough. That was brilliant. I really, really enjoyed it. And I'm sure our attendees got really good value out of it. And we've got some great questions, actually. So I'm going to get right stuck into the questions.
Okay.
So our first question is from Kay. Do you have, okay, so I think she's missing a question there. Do you know platforms or systems such as QuickBooks can replace professional bookkeeping for small, limited companies? Will they provide enough ground for accountants to do this job?
Again, I think, I've mentioned we live in a digital age. 100%, I would definitely recommend using an online cloud-based platform. And, the two sort of most popular ones are Xero and QuickBooks. I'm more of a Xero girl myself, but absolutely, they definitely help the accountant do their job. As far as replacing a bookkeeper, this is a really difficult question to answer, because although the system will do what you need it to do, you need to make sure that it's only recording what you input. So as long as you're absolutely clear on what you're inputting, can you claim VAT for this? Can you claim VAT for this? Should I be recording what level of VAT? Don't rely on the invoices always being correct. It's only going to output what you input. So, if you input all the VAT wrong, then the VAT return that the system is going to automatically out isn't going to be right. So, in the early stages, this is where I was meaning that, it's really key to get some expert help to get you set up. Because as long as if you're set up correctly and maybe given a bit of training, a bit of overview, which is what we tend to do, we'll kind of just show everyone and say, this is what you need to be looking at. Then, you could probably manage it yourself to a certain point. But you do have to bear in mind that you're only going to churn out what you put in. So you need to have an element of understanding of that.
Perfect. Thank you much, Claire. I hope that answered your question, Kay. We have a question from Sidoni. I've kept all my receipts / invoices for 4 months, currently in testing brand period, and will formally register business next month. When do I start the bookkeeping process? There are no silly questions, Sidoni. So this is a very valid question.
There are, exactly right. There are no silly questions. And sometimes it's the questions that seem the more simplest that are actually, the more key questions. I would, so for the benefit of the payroll, not the payroll system, the accounting system providing you with a year-end figure, it needs to start from when you incorporated or when you started to incur costs. So, if you're a sole trader, there's presumably, so if you're a sole trader, your tax year, doesn't matter when you incorporate, your tax year is April to April. So, 6th of April to 5th of April. So that is going to be your financial year. You can ever obviously record expenditure that you've incurred up to the point of starting to trade, but the date that you incorporated is going to be your financial year. So do it straight away.
Fantastic. We have a question from Shravd Kumar. If I have spent from my personal bank cards, then can I incorporate my business expenses?
Oh, you froze a little bit there. Can I incorporate this?
If I have spent from my personal bank cards, then can I incorporate that into my business expenses?
Right. Yes, you can. But let me just clarify something, and I should have touched on this actually, because this is really quite key, and I'm glad somebody's asked this question to remind me. Regarding bank account, it's absolutely imperative that you have a separate bank account. It might just be a personal current account you've got, but absolutely a separate bank account that you use for the business. And the reason why is, from an accounting point of view, especially with these, things like Xero and QuickBooks, your bank account can directly feed in. And it's really difficult to start filtering out business, because it means that all of the personal is also recorded in there. You've got to kind of sift it out. So you've given yourself more work to do in the first instance. But more importantly, if you ever got chosen, and in your HMRC do automatically choose people at random, but if you were chosen for an audit, if you only have a separate bank account for your financials, for your business financials, the HMRC only have access to that. If you have an account where your personal and your business is all mixed, then HMRC have access to everything. They have access to your personal finances. So always please set up a separate bank account where you can. But, in the early stages, if you've got some personal expenditure, then you can still claim that back as, the business is reimbursing you for your personal expenditure. But set up a separate bank account, please.
Second, another question from Wendy. Is there any disadvantages to using freelancers rather than employing staff if your business is not large at first?
No, the only thing that you've got to bear in mind now, especially with the new legislation, is IR35. So IR35 covers off payroll workers. So what that legislation looks at, and I won't go into too much detail now, but what it looks at is that person that's providing you a service, are they kind of deemed as an employee? So, do you set certain rules regarding the job that they're doing? And if it's seen that they should be an employee, then you as the employer, even though you don't actually employ them on a payroll, would still have to pay their taxes as if they were an employee. So you do have to look at, what is the service that they're providing you. But it is quite often that people will use kind of self-employed people to help provide them with a service. But you do have to consider the IR35 rule.
Fantastic. So Christian has asked, what accounting program will be the best for a travel agency?
Okay, so accounting, you've only got the main account platforms. What you then have, so I'll take Xero because as the example, because it's got better bolt-ons. So what you'll have Xero, which is your main financial package. That's the one that does all of the financial side. But what Xero's great as, it has loads and loads of different bolt-ons, and it has what's called like an app marketplace. So there'll be loads of different apps for everything, for every different type of eventuality. And it may be that there may be a travel system bolt-on bolts and therefore feeds all the information back and forth to Xero. So that's why we prefer Xero, is because there's a lot more customization to it by bolting on different apps. So that's probably what I'd say maybe useful there.
Brilliant. Rachel has a question. Do you recommend a specific bank for having a business account?
There's a couple of key ones that are kind of a bit more at the forefront at the moment, purely because obviously banks at the moment are being a little bit more cautious of opening new bank accounts. The two that are quite good for startups are Starling Bank and Tide, predominantly online. So you can't kind of go into a branch and set them up, but go online. So they would be the two I would look at. They do have free sort of, there's no monthly fees and things like that. So they're the two that seem to be at the forefront at the moment. But if you've banked with somebody for a long time, they may be a good point to go to as well, and because they may give you sort of preferential because you've banked with them for a long time.
Perfect. Jacob asked, you mentioned there were advantages to becoming a limited company even before earning more than £85,000 per annum. Could you touch on that for us?
It will be more on the tax saving side. So again, it sort of depends on what your business does, how quick that's going to grow. That there may be just more tax efficient. It may be, if you're doing a lot of research and development work, then you may be able to get R&D tax relief. So this is the area of the accountant's expertise. So this is where if you think that could be a possibility, go and speak to an accountant and have that conversation, because they will help you understand when. But it's usually always around tax efficiency.
Got it. And we've got our two last questions from Leanne.
Right.
Not sure if you are able to answer, but do you know the percentage of home running costs that can be written off or down as a business expense?
Not right now, no. Yeah, we'd probably have to look at what the business is and what the specific expenses are. So it may be worth having kind of a one-on-one conversation with somebody so they can get a bit more understanding of what you're doing and have a look at that.
Got it. And her second question is, how often would you recommend to have accounts looked at for a small business?
Okay, so if you're looking at it yourself, which is what I would recommend you do. So you're having some level of monitoring, maybe every 6 months. I probably wouldn't wait till year end, because year end, then you're looking at historic and there's nothing you can do to affect it. So I would always recommend at least looking at it. Some accountants maybe do, the quarter before the year end, so the 3 months before your year end, so they can look at what's going on, what needs to happen. So you've got 3 months to take some action. But at least once, but do it more often, please. That's what I would say. Even if you're just doing it yourself and having, looking at a basic profit and loss, and you're just looking month on month, what do my figures look like? Are they going up? They're going down? Or they staying the same? That's the basic what you need to be looking at.
Fantastic. So we've got just time for the last 2 questions. The first one is from Kasamaki. I hope I'm pronouncing that correctly. Hi, what if one has already registered as a business and have not started trading yet? So in terms of their bookkeeping, I guess.
If you haven't started trading, but I'm presuming if you haven't started trading, you may still be incurring costs. And is whether you're doing either one or the other or both, then you need some book in place. So whether you're trading or not, it's kind of not even affected. But if you're starting to spend money and then you've got bookkeeping to do, because you've got to record those expenditures and pay those bills.
Brilliant. And our last question is from Kay. Do all importing businesses have to register for VAT despite having revenue below £85,000 in order to pay VAT for imported goods?
Yes.
Perfect. Short and sweet. Wonderful. Thank you so much, Claire. I mean, the value from the session and the wonderful questions. Thank you, everyone, for submitting your questions as well. I hope Claire was able to give you all the advice and answers that you need. Thank you again, Claire. And for the rest of you, once this session ends, which is in a few seconds, you can head straight into the lounge. Claire will be there. Grab a seat with her at the table, continue any other questions, or reach out and connect. All her details have been shared in the chat, but you can also access them on her speaker profile here on the platform. And I see you all in the next session. Take care, everyone, and bye.
Thank you very much for having me.